Hey guys, Doug the Retirement Guy here. We have a great update of our current video. And we want to just say this video is brought to you by all of our Patreon supporters. Without them, we could not do what we do. If you want to become a supporter, look down in the description and you'll see support the channel. Hit that Patreon button and you can join for free. You can join for a quick little donation or you can be a regular subscriber. But this is what brings you this video, and let's continue. Today, we bring you the weekly paying dividend. We are now up to 37 different funds. We've bought them all. We've invested our own cash into this. We got the new X funds. We got the Rex shares, YieldMax, Granite shares, Defiance, and Roundhill. And we're going to cover each and every one of those today. So we'll take a little bit of time to do this. First, I have to give a notice to all the viewers. Past performance does not guarantee any future results. The information provided by this video is for educational and informational purposes only. It should not be considered financial or investment advice. The examples and suggestions discussed are basically situated in the individual situation. Always consist of licensed financial advisor before making any financial decisions. We have to give you this information to keep within policy. So let's first talk about our new fund, Nicholas Crypto Income, the BLOX. You probably heard about this one. It just hit the marketplace. They are it's a managed program and an ETF fund that is going after an exposure to the blockchain technology. So this is really all into the crypto business that they're trying to do. If you look at the fund objective, they're doing Bitcoin and Ether, plus they're doing the whole crypto industry companies, plus they're still paying weekly, which equals out to what the BLOX is. Okay, the fund right now is fairly small with only $6 million under assets. They have 275,000 outstanding shares. Their closing price was $22.08 on the first opening day. Their margin spread, always said, is 0.58. Now, the fund so far is doing very well. Now, of course, we would expect that with crypto, the way it's been in the marketplace, starting off right around that $19 point, getting all the way up to right around that July 4th, where we have a slight little, I'll call it a slight little drop off, but has regained all the way to July 11th. As we do the video today, it is $22.26 trading for. The fund, as I said, started in 6/17 of 2025. It paid its first dividend. That's why we brought it into the fund, because it did pay its first dividend. And it's got a market return right now of already of 16.12%. So we're going to keep an eye on this one. It is way too new to make any decisions which way we're going, but we're going to continue watching this through for you. When we look at the fund, the price, as we said, we bought in at $19.48. We were able to buy 51 shares. The value already, that it's up to that $22.19, that we are up to $1,139.01, or up 13.9% so far. The dividend paid 14 cents, very strong number there, which gave us a $7.38 for the week. So about 0.75. So the totals, this thing is up 14.64%, including dividends and the stock brand. So I'm really pleased right now with the BLOX, but we got a lot of room, we've got a lot of road to cover to see how well they can do. So we'll keep an eye on that one and we'll move forward on. So here we go, 4 weeks into it, July 11th, the Rex shares. The big fund, the COII, is doing extremely well. I think the Rex shares right now, I think their strategy is doing extremely well. They're really producing across the board on all their funds. The only one that's struggling, as you can see, is the Tesla TSII, is down 8.45%, and that continues to go down. That is a fund that just is not hitting its mark, and it needs some adjustments. The positive is the fund has grown 13.73% in only 4 weeks. we have done very well with this one so far, other than that Tesla find. So, and remember, Rex is one of those companies that is trying to get growth, 50% growth, and 50% income from covered calls. So half of their fund is put towards growing the fund, the other half is growing income. So right now it looks like they're doing very well on the growth side of it. Let's take a look at the dividend side of it. And as we look at that, the dividend is doing well. It's up this week, paying $40.34 total through the 4 different funds. Even with the Tesla really paying out the bigger dividends, but losing it on the other side, COII still beat it this week with a payout of $11.04, giving us a total of $63.86 for the 4 weeks. So that puts us right now, we've gained $239.25 or 1.01 for the week, which will give us a 52% covered dividend return. So I highly look at the Rex right now. I like what they're doing on both sides of this fence. So it's really something that we're focusing in on hard. So when we take a look at this as a combined total, the fund has $4,000 invested into it. It has generated $549 in stock return of a 13.73% so far in the 4 weeks. We've gained $239 in dividends or 5.98% for a total of 19.71. So as it looks as Rex is doing very good on the stock return, we want to see a little bit increase in those dividend growths to get that to where we want to be a 50-50 mix. So even if we lost 3% in the return and gained it in the dividend, you'd be well balanced. But unfortunately, this is what you get after 4 weeks. So Rex, we give that a thumbs up. We're really pleased with the way the performance of this fund is done. So let's get into Granite shares. This is the 5th week for Granite shares into the program. And when we look at it, all but one fund is definitely up this week. Again, it's the Tesla market. Tesla's news just not doing very well out there in the marketplace, and that one's come down again. And you can see that so far the growth of the fund, they're down 18% on Tesla alone. And then XBTY has just went negative on us. So YSPY is up 2.6, and that's the best stock that Granite shares has. Okay, the whole fund is down 2.72%. It is down from last week. Even though we have 4 of the funds up, we are still down from last week because Tesla is really bringing this thing down very, very strongly. So far, we're not real pleased with the Granite shares performance right now. They are struggling doing what they're doing. So we're not real pleased with the performance of it. When we look at the dividend side of it, this is a complete opposite. The Tesla is pouring in dividends. You can see they paid 25 cents this week. It gave us a $21 return, and they've paid over $146 already in dividends in just 5 weeks. So the weekly return is $77.59, which is technically down from last week. We've gained $513 in total gains. It's paying about 1.55% per week. So that sounds like a big number, which would give us about an 80% return. So on the dividend side, they seem like they've got it paying more into the dividend side than they're doing in the generating income. So this is kind of an area we're looking at and say, do you really want dividends out of this, or do you want a mixture of both? What is it that you're really looking for? So far, we're mixy-washy on the Granite shares. I would put more money into Rex before I would do Granite shares at this point in time. When we look at the total return across the board, the stock return right now, as we said before, is down $136. We've lost $136 off of the $5,000 that we invested into this program. We've gained only $513 in dividends. So that basically gives us only a $377 return, or a 7.56% return over 5 weeks. So I'm really, Granite shares would not be the one I'd invest much money into. I would not put a lot of attention to it right now. Their NVIDIA program is doing well. As you can see on there, it's the number one. It's given a 14% total return. And that's coming from the $12 in the stock return, $128 in the dividends. So primarily it's a dividend type return program. Other than that one, there's nothing else out there that I'm really excited about. The Tesla one, you look at that one, even with the big dividend that they're paying, it's still down 4%. You're losing money when you're buying a TSYY. And it just seems like it just does not want to fit into the marketplace. So moving to the Defiance, 11 weeks into it, it's one of our original packages that we started with. And when we look at this, the new winner of the street is going to be MST at 11.89% growth rate. So this thing is really shot up. It's rocketed up. It's been doing this over the past couple of weeks, kind of a quiet runner for us, but it's up to 11.89%. Even with the whole rest of the funds all down this week, MST was up. The other positive, all of the funds are up. All their funds are completely up this week, so that's a good positive. And the whole fund itself is up 5.48% for natural growth. So we're pleased with this doing decent growth, but primarily coming from one fund. When we look at dividends, the dividends change the whole different structure again. IWMY is the number one dividend gainer of the Defiance group. It has collected over $112.60 so far for an 11.26% in over 11 weeks. I can't walk away from MST at $89.57. So they're starting to really market that thing and come into market play with it. And then QQQY is doing really good at 8.70%. The fund is up $59.91 this week. So they are up over last week, paying a little bit more dividend. We've gained to $413 off of the 5 stocks. It's paid 1.2% for the week, giving us a 62.80% total for the year. So we're really pleased with what we're getting so far, and the numbers are looking fairly decent from what we're talking about. So Defiance is kind of one of these that we'll have to look at the total balance now of how well they're actually doing. And we look again. MST is 20.85% when you add in the stock value plus the dividend to give you that return. That is something to talk about, but I also want to talk more about, look at everyone else in the Defiance fund. They're at 12, 16, and 13%. So they're all doing very, very well across the board. And this is what you get when you buy at that one price point, or the right price point to get into this. You can allow this to give it some room to grow. And every one of the funds has grown. So our stock return is up $274 or 5.48%. And our dividend is at $413 or 8.27%. So it just shows you that they do have a good round balance, that you have a nice increase above inflation and you have a nice 8% return so far. Only 11 weeks, remember, in this period. The total stock return right now is $687 or 13.75%. We run that out all the way out for 52 weeks. We should have a decent return across the board from Defiance. So we give them a good thumbs up, and definitely something for you to look into and evaluate. Now the Roundhill. Roundhill, here we go. 11 weeks into this one, and Roundhill has been really producing well lately. It's been doing what we've expected it to. COIW, their coin investment program, has rocketed again. When we bought this back when we started this program at only $33, we never would have guessed that this thing would up to be almost a $60 stock already. It is up 76.8%. Is just really throwing, I'll call it throwing the numbers off across the board, making this showing that certain funds can take off. So we look at this, a lot of the funds were down this past week, about a 50-50 mix across the board. But the fund as a total is up 11.74%. So very pleased with the performance that we've gotten out of Roundhill. And there's so many funds in here that we could talk about. We could spend hours talking about the Roundhill package. but overall, nice gain, 11%. Most of it's coming from coin. When I look at it, there's certain ones. The Amazon one is down 6.26%, and their Tesla is down 5.67%. So not as bad as others, but both of you, you're getting the Apple and you're getting Tesla are not performing out of the Roundhill package. When we get to dividends, again, coin or COIW pulls out the big weight, 88 cents this week. For a $26 payout to us. Very, very strong numbers. They are paid already 17.08% in 11 weeks. So we're very proud of that one. But the PLTW, that was the running, it's kind of the competition. That one was been running very, very strong since we started this program, is at 11.91%. So our dividends this week, even with the good performance that we had from COIW and PLTW, we are actually down a little bit to $106 this week alone on the fund. We've collected $936 so far. It's paid a 0.89%, and we're looking at a yearly dividend total about 46.08%. So again, Roundhill is going to be, I look at saying, number one for the week. It's produced the best performance. So we take a look at the total return across the board, and you can see how COIW is really just throws the monkey wrench into the mix. But hey, the numbers are the numbers. 93.88% when you take in the stock return plus the dividend return. Some very, very strong numbers there. But when we look at the whole package across the board, our stock return is up $1,365 or 12.41%. Nice, strong, positive growth rate. So when everyone sits back and says, oh, NAV loss, NAV loss, NAV loss, since we've done this for 11 weeks, we are actually up 12%. So we don't have a NAV loss. We're actually gaining just a hair over 1% per week in our stock value. When we take a look at our dividend return, we're getting $921 or 8.38% return. So this shows you the well-balanced part that Roundhill gives us and why we're proud and excited about Roundhill is we're getting a good growth rate plus a good dividend return across the board on the package. So when we look at this as a total return is $2,286 or 20.79%. So overall, we look at across the board, is there anything really out of whack with what we're talking about? And no, it's only one fund right now that's actually down. That's the AAPW. But they're only down 0.28%. But down is down. So we need that one to run a little bit longer, get a little more dividend to it, probably break even next week or the week after. But overall, we're pleased with everything that we have going there. Even the Tesla program, the TSLW, if you look at that, it's up 9.67% because of the big dividends that they're paying. So that's how you got to look at it, your total return, not just a big dividend, but what your total return is. So we're going to YieldMax. Now I know everyone's excited to see the YieldMax package up here. And we go into this one here and you will see GPTW is our number one fund that's really running strong at 19.898%, almost 20% increase in over 11 weeks. Now it is down this week, but again, pulling out some big numbers across the board. The one that people always want to talk about, the ULTY, is down this week, but still up 5.94% for the 11 weeks. The other one everyone talks about, which is up this week, which we're excited about, and that is YieldMax, or the YMax, and that is up 0.65 in return so far since our initial investment. So it's trolling along right, doing a very good number. The GPTY at 19.8 gives us the growth, and the fund is up 7.67% for the growth. How do we do in dividends? Well, ULTY rocketed it. Even though it's only paying that basically 9.6 cents per week, because of the fund and the price of that fund is only $6.28 right now, we were able to pull $16.30 in dividend returns. Very strong number, 18.21% across the board. You look at the next one, YMax, 10.09%. So those two are big, big dividend players. And the nice thing about it, we're starting to see some growth from both of them. So we're very pleased. The other one's Aspica. LFGY is doing very well, 48 cents paid this week, giving us a nice 9.62% in the dividend. That really gives you your top three right there. One thing that throws me is that the CHPY, the coin base from YieldMax, has not performed as well as the other coin programs that we've looked at. Still very respectable at 9.25 in a dividend return, but overall, it's not the strongest one that we have. So dividends collected, we are definitely up this week. $76.33 is what was collected in. We've collected $867 so far. We're at 0.85 for the percentage week for the week and 44% for the year trailing estimated number. So realistically, the dividends are running with Roundhill and YieldMax are running fairly equal with each other. But you can very easily pick out a few the top three and not have to worry about your dividend market. So let's look at the total performance. Total performance right off the bat, GPTY shows us the leading way of 28.32%. Now, with that sitting there, the second place winner is ULTY. And this is why we've talked about and we've done other videos on ULTY. Why is it time to get ULTY into doing the market that it needs to be done? GPTY, same thing. They're giving great stock returns plus a dividend kicker that gives you the big numbers. Now, ULTY has a nice gain, but a bigger dividend. So the question comes into is what would you be looking for? You want growth or do you want income? Both of these give you a little bit of mixture of both, but some will lean more to the growth and some will lean more toward the dividend side. I give you the one that a lot of people look at is the YieldMax. YieldMax is now for us is up 10.74% for total growth. That's giving us $6 in growth in the stock value and $100 in dividend. So we have gained right now $690 or 7.67%. Dividend gain is $867 or 9.63%. And for a total fund of $1,557 or 17% total return. So it's funny how you look at this one. This one has a little bit bigger dividend return than stock return, while Roundhill had a bigger stock return than they did dividend return. So it goes back to, as an investor, what are you looking for? If you're looking for more dividend, you need to talk to your financial advisor and talk to them about YieldMax. This is for educational purposes. If you take and want more growth of your fund, maybe you need to want to talk to Roundhill. Talk to your advisor about Roundhill. So guys, let's give you a summary of the 11 weeks in. The stock market now is $37,882 and is a fund value. We are up $882 or 2.38% because we continue throwing money into it to buy additional shares. This is why these numbers are off or look like they're a little bit lower than what's going on, is because we keep putting more and more money into this. Our dividend is up $367 a week or 0.99%. So we love that. And our estimation is going to be at 51% for the year. So we're pleased with the numbers. Everything's still green. That was the whole thing of this video. What we tried to do is show people that where weeklies are not about NAV erosion. They are about growth if you do it right and do it across the board. So we're going to go with the Doug's picks. We had to change this because of rules and regulations. We have now changed this to a little different. I know you're not going to like it, but here we go. Our number one fund is ULTY. The total return of 24.15, the growth rate of 5.94%, and the 18% dividend. We believe ULTY is the fund that if someone wants to start investing into, that is the fund to take a look at completely across the board. Next one, you can't pass this one up, is the coin COIW, total return of 93.88%. It has the huge growth at 76.80 with a 17.08% dividend. I highly recommend and highly warn you on the coin, on the COIW, is that you have to watch your buy-in number and so that you're not going to work off of a too high of a number and have to deal with NAV erosion. So you got to watch that one very, very carefully. The MST is at 20.85% total return. This one again has been the quiet runner. It's up 11.89%, and it's also in the dividend, 8.96% in the dividend. Our best dividend stock right now, the one that we highly recommend if you're going to look for dividend payments, and that's going to be ULTY, paying only 0.96 cents, but it generates the best return because of the price tag of the fund plus what they return each and every week. So if you guys want to have more information, if you are looking for the buy-in numbers of what price points you should be at to buy in and buy out, I highly recommend that you subscribe to our Patreon program, because that's where we'll be supplying more and more of the information, because we can do that over on that side. So go into the description, click on that Patreon, click on that, join in there. I believe it's only $2. Will get you all the information on every one of the funds of what we buy and buy out at. So guys, again, this is Doug, the retirement guy. We got to give you the notice. The past performances do not guarantee the results of what's going on. This information in the video is provided for educational purposes only. It should not be considered financial or investment advice. I highly recommend that you see a financial advisor for professional before making any financial decisions. But if you like what we're doing, give us that thumbs up. If you haven't subscribed, hit that subscribe button. Join the crowd. It is growing by leaps and bounds. And leave any comments down below. Guys, thanks for watching, and we'll catch you at the next video.